In 1995, Donald Trump reports a staggering $916 million loss on his tax returns. This massive loss sets the stage for decades of complex tax maneuvers that would later capture national attention. Such a loss allows him to potentially avoid paying federal income taxes for up to 18 years. Using a tax code provision that permits wealthy business owners to carry forward net operating losses to offset future income. The matter of Trump's taxes becomes increasingly significant as he transitions from real estate mogul to presidential candidate in 2015. Breaking with a tradition upheld by every major presidential candidate since Richard Nixon, Trump refuses to release his tax returns.
I am under a routine audit and will not be releasing my tax returns.
This decision sparks intense debate and multiple legal battles that stretch across his presidency and beyond. In September 2020, the New York Times obtains and publishes details from more than 2 decades of Trump's tax returns. The documents reveal that in 10 of the previous 15 years, Trump paid no federal income taxes at all. In both 2016 and 2017, he pays just $750 in federal income taxes, despite claiming to be a billionaire. The returns show a pattern of reporting substantial losses and using various tax breaks and deductions to minimize his tax liability. The Manhattan District Attorney's Office launches a criminal investigation into Trump's business practices, including possible tax fraud. They examine whether Trump's organization manipulated property values to obtain loans and tax benefits. Meanwhile, the House Ways and Means Committee engages in a lengthy legal battle to obtain Trump's tax returns, citing their oversight responsibilities and concerns about the IRS's mandatory audit program for presidents. In December 2022, the House Ways and Means Committee votes to release 6 years of Trump's tax returns to the public. The documents show that Trump and his wife, Melania, paid $1.1 million in federal income taxes during his presidency, but their tax rate was just 4.4%, far below the 37% top rate for their income level. The returns also reveal that Trump had bank accounts in China, Ireland, and the United Kingdom during his presidency, raising questions about potential conflicts of interest. This unprecedented transparency into a former president's finances transforms the public's understanding of both Trump's business empire and the American tax system itself. It sparks renewed debates about tax policy, wealth inequality, and the ability of wealthy individuals to minimize their tax obligations through complex financial structures. The release of Trump's tax returns becomes more than just a political story. It represents a watershed moment in American tax history and governmental oversight. As investigations continue and legal battles persist, the legacy of Trump's tax returns reshapes discussions about presidential transparency, tax reform, and the relationship between wealth, power, and public accountability in American democracy. The episode fundamentally alters expectations for future presidential candidates and their financial disclosures, marking a significant shift in American political norms.